No. This is huge. This is one of the reasons the market was up today. So Biden and McCarthy are both saying the U.S. will not default on debt, on obviously the debt. And so in regards to this, I mean, I'm not surprised. They should be able to get this passed, right? Biden can't have this go awry, right? And McCarthy's going to be able to get some things his way. And he's going to be able to get some things not his way. They'll find an agreement. You know, the market always worries about these sorts of things. They always find a way to get it done. It's politics. They're going to make it go to the last minute. It's going to be a drama show. Both sides are going to make the other side look bad. It's the way it's been, and it's probably the way it will always be. In another few years, we'll be dealing with that again. Okay, Target. This is one of my dividend stocks. They reported earnings here. I've done very well in this stock so far. Very, very well. It's treated tremendously well, not just in terms of dividend gains, but also stock gains from the price I was buying this past year, right? So in regards to Target, you know, it's not an exciting time in their business whatsoever, right? Sales was up 0.5%. Other revenues up 10%. Total revenues up 0.6%, right? Not an exciting time for Target's revenue in 2023. And so if you're thinking of excitement in regards to this, the stock price keeps moving up because ultimately it's Target. It's seen as reliable. It's seen as steady. And ultimately it's seen as it'll build out business in 2024 and beyond, right? Operating income was down more than revenue, obviously, about a 2 percentage point difference there, so that's not good. Net earnings was down 5.8%, not good. And diluted earnings per share down 4.8%, not good. But, I mean, honestly, at the end of the day, that's what we expect from Target this year. Most years, not, okay? But this year it is, okay? People get way too excited about a new emerging technology or emerging something. And then there's kind of like this period where everybody gives up on it and they're like, oh, that's not going to be the big thing because it doesn't hit right away. And so you would understand, like, these massive technologies, it takes a long time for them to play out. It's not like they just tomorrow all of a sudden everybody in the world's using this and doing it this way and things like that. This is a process. And you know, the tech bubble was the greatest example of that, right? Late 90s, everybody was getting really excited about the internet and the changes that were going to happen there, right? And maybe got too excited, valuations went too high, and then all of a sudden everybody gave up on it. And meanwhile, you had massive companies that were growing exponentially their business models, and a lot of folks just weren't looking at those or taking those companies serious because it was like, well, remember when it used to be valued here, now it's down here, and it's like it's coming back. You know, Amazon, I think, is a perfect example of that, of a stock that fell 90% plus in the tech bubble. A lot of people gave up on it, and meanwhile, Amazon just kept growing their business year after year after year after year, and over time, they got the respect of everybody. You've got to give these technologies time, man. Time for it to play out. Time for the story. You can't just, you know, think it's all going to happen in a day and then say, oh, because it didn't happen today, it's all done. It's, you know, man, that's market psychology, though. They get too excited and they get way too depressed on all this stuff. Let's not forget when iPhone came out. The most game-changing technology we've had in certainly modern times, right? The smartphone, tablets, that whole wave changed everything forever, right? Mobile devices, it changed everything forever, right? All of a sudden, everybody's got a supercomputer in their pocket nowadays. Like, holy smokers, that's no dang jokers, right? Who could have imagined 20 years ago that everybody would have a supercomputer in their pocket, right? That's what we have nowadays. And don't forget when that product launched. When did Steve Jobs show off the first iPhone? 2007, right before the great financial crisis, okay? And that product launched into the great financial crisis of 08 and 09 as they started to scale that product, right? And it just got more popular and more people started getting mobile devices, and then the iPad came out, and obviously all the other companies came out with their own tablets and their own smartphones and things like that. And obviously that was a game changer forever. It was a game changer obviously for Apple, but a game changer for so many other companies that benefited from that. Meta benefited from that in a huge way. Google benefited from that wave in a huge way. I mean, you could go down the list. It's amazing what that did. Amazon certainly benefited from that. The fact that you can now order anything from Amazon just on the app in a matter of seconds. Everybody benefited from that in a huge, huge way. And it is a game changer for everybody. And AI is certainly one of those sorts of game changers. But I think AI is going to be more of a game changer on the cost front, to be quite frank, for these companies more than on the revenue front. Revenue front is definitely going to help, and especially a company like Meta, but I think it's going to help bring down costs in a major way and help profitability. You know, I don't want to figure out who's going to be the most direct beneficiaries. I do know, no matter what, if AI is a huge success, cloud's going to benefit big time, right? Which is obviously companies like Amazon and Microsoft specifically, right? And so rather than try to figure out which applications are the most popular, right? Which softwares are the most popular, let me try to figure out this, right? And so that's an interesting perspective to play out there. So rather than trying to find a Palantir, let me just find an Amazon, right? A more easy play in regards to that, right? I think it's an interesting perspective, right? You certainly are going to take less risk with a strategy like that, but you're also not going to get as much gain. For somebody like myself, I own Amazon and I own Palantir, so I'm playing the direct play, and I'm also playing the kind of indirect play, the picks and shovels, I guess you can say, of Amazon, how they could benefit. You got to remember, you're planting trees in this, right? And when you plant trees, and you're going to get your hands a little dirty, okay? And so that's the stock market as you build out your portfolio. And you're going to have all these people always saying, oh, it's going to crash, and this and that. There's going to always be a million people saying a million things, okay? At the end of the day, what do we know throughout time? We know that the ones that buy assets get all the wealth. It's always been that way, and as far as I see, it's always going to be that way, okay? The ones who buy all the assets end up with all the wealth. And so you got to understand all these dips you ever get, whether you're getting some of the best companies in the world at 40, 50, 60, 70, 80% discounts like we were getting last year, right? Whether you're getting real estate for 10, 20, 30% off, right? You've got to take advantage of those. Great homes in great neighborhoods across the United States of America are going to do very well over time. Are going to cash flow a whole lot of money to you and going to appreciate a whole lot over the next 10, 20, 30 years, okay? Great companies that have great business models and great management teams are going to produce you a whole lot of money over this next 10, 20 years. But so many times people get caught up in all the short-term stuff and trying to pick bottoms, and ultimately they're just reacting out of fear. If I had to be a psychologist to these folks, they're reacting out of fear because they're scared. They don't know. They got all these worries, okay? And then what they do is when everything looks great again, right, and everything looks coast is clear, as it did in 2021, everybody piles into the market, and you have that type of situation. And so what we're going through right now, you got to understand, this is going to be one of the most hated bull markets we've seen in modern times. And the reason being is we're rallying into a wall of worry. And you have so many people that are so offsides, that are so underinvested into this market, that are short, that are puts, that are, just not in this market right now. And they're watching a stock like Nvidia, an easy money stock, go from $110 to $300+. They're watching Meta go from, under $90 to $240 on its way to $400 to $500 over the next few years. And they're watching all these moves, and they're just sitting around and just saying, oh my gosh, can't. And then just their plan is not playing out, to be quite frank. And they think certain things should happen the way they want them to happen. But the market doesn't play it like that. The market doesn't care about how you want it to play out. And you, as an investor, should not care about what the market wants you to do. At the end of the day, if you see opportunities out there, you got to pounce on those opportunities. You've got to take advantage. Regardless, if you have a feeling this might happen, or this stock might go down to this price. Oh, I can't buy Meta at 88 because I think it might go down to 78. It doesn't matter, man. If you understand how to value companies, if you understand how to project numbers out, and you understand how these business models work, especially for these experienced companies with great management teams, you've got to take advantage of those opportunities, folks, okay?